Hello students, my name is Gaurav and we are going to discuss this very important topic from which a lot of PT questions come every year, and the topic is banking, finance and monetary policy. Now this is a very big topic, so it will be covered in the next 3-4 sessions. The first session that we are going to have here will be on the topic of money. Okay, so let us start with the topic of money. So in the topic of money, we have the following important concepts. Just give me 1 second, please. Yes. So we have money versus barter. Okay, what is the importance of money? How it came into being? What advantage does it offer over the barter system? Then what is the contribution of the money into our economy? Okay, and then the types of money, where we have commodity money, fiat money, fiduciary money, bank money, etc. And then we have the features of money, which is related to contribution of money, and then the measures of money, M0, M1, M2, M3, M4. These are the various questions type that we have, or the topics on which question come. Now money versus barter or the need for money. Basically barter is the traditional system in the tribal society where people exchange one product for another product. You grow wheat, so you have wheat. You exchange that wheat with, let us say, clothes, with someone who makes textile. So likewise, people produce different things, but they trade objects with objects. Now barter is a good system. There is no as such issue with barter system, but barter system has some limitation. Barter system is not bad, but there is a limit up to which barter can happen. Okay, so barter system could not lead to the development of the modern civilization or the civilization as such. So it was only after money was invented in some form that barter system was assisted with currency or some other mode of payment that we have had civilizations. All the major civilization, ancient civilizations I'm talking about, had some form of currency or the money. And if there is no civilization which did not had money, or there could be very small rare exception, but in general civilization was possible only after advent of money. Now what is the limitation of barter? The first limitation is dual coincidence of need. If I need to exchange my wheat with someone who make clothes, then the point is both of us should have need for those products. The other person should also have need for wheat and I should have need for cloth. Otherwise transaction cannot happen. Okay, so this is the problem in the barter. Now I have excess wheat, other person has excess cloth. We can exchange theoretically, but the other person has already taken wheat from someone. Now the person needs rice. I do not have rice, I have wheat. So other person says that no, for wheat I will not give you, I will give it only for rice. Since you do not have rice, you cannot have trade. Even if both of you want to trade, you have excess product, you can't trade. This is a big problem. If there would be money, you could sell your wheat for money, and with money you could purchase clothes like all of us do today. So this is one of the biggest advantage of the money. So that is why barter limited the trade possibilities. Okay, and if trade is limited, the growth of economy, the civilizational growth will also be limited. So that is why everything was very limited at that time. Clear? Now other problems with the barter are not so big as this much, but they are also considerable. In the barter, one of the problem is divisibility. Okay, for example, I have a goat. Okay, I want to sell this goat for wheat. Okay, I can arrange goats for myself. Through goats I have milk also, and because of goats I have meat also, I have wool also. So I have 3 products which I produce myself. I need wheat. Okay, now I want to sell one of my goat for wheat. I go to a wheat trader. Now the exchange rate that is prevalent in society is 1 goat for 20 quintal of wheat. Okay, or maybe 10 quintal of wheat. Now The wheat seller tells me, sir, I only have 5 quintal. You give me half of your goat. Now that way trade cannot happen. Okay, the asset that you have is non-divisible. Many times this could happen also. If you have surplus wheat, wheat is divisible because it is in very small units. Now that is possible. That is why wheat was accepted as currency in many areas. Okay, something which can be broken down into small units. But how do you divide your sheep or goat? You can't, unless you are ready to sacrifice the goat. Okay, rather than sacrifice, I would say kill the goat. Otherwise, okay. So if you are ready to kill that goat, that you give half to that person and you think, okay, I'll take half of the wheat, maybe this half of goat my family will eat in the next 2 days. But that's not how always trade can happen. Okay, you would like to have that much quantity from other person also, so that was also a difficulty. Then there were many other difficulties. Okay, accounting difficulty. So money helps in accounting also. Always money acts as a unit of accounting. Then storing. Your products have a certain life, but after that they cannot be stored. But if you exchange that for money, the money can be stored for a very long time, so or almost infinite, let us say. So storage, these are the solutions that money provided. These are the contributions of money. In fact, as we come to the contribution of money, what money provides? Freedom of trade. Dual coincidence of need is no longer there. You can sell whatever you want to sell for money, and you can buy whatever you want to buy for money. Both of you need not have the coincidence of need. Okay? Similarly, the money is perfectly divisible in most of the cases. Then it is also very easy to use as a unit of accounting. Then money can be used for storage also. So typically in very old tribal societies, the initial forms of money were salt, wheat, okay, cowries, the small seashells, okay, and similar things. Over time, metallic coins, or simply the weights of metal, precious metal, were used. Okay, so over time, commodity money developed. Okay, we did not had the modern printed currency, coin or currency. We initially had commodity money. So money which is in the form of a commodity. So it can either be wheat, salt, or gold, silver, etc. They have their own value, they have their own intrinsic value. Then a major change happened later when we introduced the fiat money. Fiat money is the official currency of the state. When the government started issuing currency, that this is the money, this is what you use for exchange. So that changed a lot of things. Fiat money simply means the official money issued by the government. And when we say official, official means something here. Official means everybody has to accept here. You cannot say that I will not take payment in that currency. If you do so, that is punishable by law. You go to a shopkeeper, you buy something, you want to make payment to that shopkeeper with, let us say, 500 rupees notes. Shopkeeper cannot deny it. And if shopkeeper denies that I will not accept India's currency, you give me $1, you can complain against that person and that person will be in prison. So fiat money has this feature, you have to accept it. It is officially issued by state. Then there is fiduciary money. Fiduciary money simply means money which is acceptable because of trust. Modern fiat money is also fiduciary in nature, by the way. Modern fiat money which is issued by government is also acceptable to us because we trust that there is a government, there is a system. Until there is a stable government in the country, the currency will also be stable. Otherwise, people will lose trust in the currency. Okay? So countries which have unstable governments or which face long instability, their currencies very much deteriorate. Okay, they lose acceptability. People start using barter again. People then start using gold, silver, or even foreign currencies in that case. So even modern fiat money is also fiduciary. Traditionally, fiat money, when government would create currency, the equal amount of gold or a proportional gold it would keep as a reserve. but that is a system which is long gone. US had that system until the late 1960s, but today no country has fiat money which is backed up by some reserve. Okay, fiduciary is simply on the basis of trust. So Bitcoin is a good example today of the fiat money. And then we have bank money. Okay, today our bank deposits, our bank debit credit card also act as money. They can do any function that money does. We can go anywhere, pay with that and get anything that we want. So bank deposits can also act as money. So that we define as the bank money. Okay. This is clear. So then we have the features of money. Okay, what is the, let us say, how do we define the money? So a good money is the one which, let us say, there are basically soft money, hard money, okay, and likewise there are many other different terms that we use, and with that we also define certain features of money. There are some currencies which are known as soft currencies. Soft currencies are those which are very unstable, okay, which change a lot, fluctuate a lot because of international pressures. Hard currencies, they are much more stable, and likewise there are more terminologies here. Okay, so a good currency should be stable. That is a good necessary feature of a money. It should be acceptable almost universally. Okay, that is also a necessary feature of money, and likewise we define. Then we have measures of money: M0, M7, M0, M1, M2, M3 and M4. So I hope you know what is M0, M1, M2, M3 and M4. M0 is the reserve money. It is an indicator of the cash in the system. Okay, so largely it is cash, but it also include the other liabilities of the RBI. Other means all the liabilities. Basically, we define M0 also as H, high power money, and we also define it as reserve money, and we also define it as central bank liability. All of these are the terms for M0. Central bank liability, because money issued in an economy is a liability of the central bank. It is the responsibility of the central bank. That is why we use this term. So central bank's liability. So M0 is basically the currency in circulation. Plus bank deposit with RBI plus other deposit with RBI. There is one easy trick to remember these. The trick is simply that other deposit of RBI come in every single of these. So you do not have to think about it. क्योंकि ये सब में आता है तो इसको अलग से याद नहीं रखना है कि किस में आता है किस में नहीं आता है. We do not have to remember where it comes, where it doesn't. If something comes everywhere, then you can just simply skip that from your brain. You have to remember that it comes, but it comes everywhere. So you do not have to apply conditions to it separately. So other deposit of RBI comes everywhere. Currency in circulation is roughly, let us say, the 99% part of it. Okay, but then RBI's liability is not just the currency. RBI also take deposit from banks, whether it is CRR or other things. So those are also liability of central bank. Since we define this as central bank liability, we have to add these to complete the equation. But primarily it reflects the currency in the circulation. How much cash we have pushed into the system. That is essentially what we measure with the M0. Okay. Now, M1 is called narrow money. Okay. Because here we look at the narrow approach to the money. Money which can be used at any given point of time for buying, for purchase. So basically, whatever is available with you to purchase immediately. I go to market, for example, right now. With how much money I can purchase? Whatever I have in my pocket, okay, whatever I'm carrying in my wallet. If we add it up for everyone, that would be currency with public. So currency I'm carrying with myself. That is the first entry. Second, bank deposits. Okay, demand deposits with bank. So today I can not only pay with my cash that I'm carrying in the wallet, I can also pay through my bank account. Okay, whether it is through the debit card or in fact it is through the ever popular UPI. Okay, so demand deposits also I can use for transaction. Basically, this is the money I have available at any point of time when I'm going to market. So basically, that is how we define narrow money. If we add it for everyone, that is what we get. Demand deposit with banks. Okay. Plus, I have told you already, other deposits with RBI. This comes as a residual entry everywhere to complete the equation. Do not bother with this too much. Other deposit with RBI. If we specifically want to talk about what is other deposit with RBI, it includes the central government deposit with RBI, state government deposit with RBI, the IMF tranche with RBI. What we have to contribute to IMF, we do not directly give to IMF all the time. We keep it with our own RBI. Every country does it like that. If that is required for IMF in their SDR, they will call for it. Okay, so it is always kept as a advance for the IMF. This is M1. Okay, what is M2? In the case of M2, we also add the saving deposits with the post office. So that makes it M2. Okay, so M2 is simply M1 plus saving deposit with post office. So why we have M2? Because in India, post offices were always very important. Banks were not there everywhere. Now after Jan Dhan Yojana, we have universalization of bank account, but earlier, half of India's population used to deposit money in post offices in rural areas. So even that also had to be added up. That is why we had a separate calculation for it. But today M2 is not that much relevant. What is M3? M3 is M1 plus. Now M3 is also called broad money, and this is also our official money supply. Okay, M3 is our official money supply also. If we want to say the total money supply in India, how much is that? That is equal to M3. So M3 is M1. M1 is these three plus time deposit with the banks. Just this one entry will be there. Time deposit we add to it. So basically here we had demand deposit, means whatever we have in our regular bank accounts that can be spent through credit cards. But, oh sorry, debit cards, my bad. Now here we also add up our fixed deposits. Now fixed deposit you cannot spend through your check or debit cards or UPI. First you have to break your fixed deposit. Then that cash will be available in your bank account after some time. Then you can use that money. So that money you do not keep for transaction. हम वो पैसा अपने पास हमेशा खर्च करने के लिए नहीं रखते. We keep that money as wealth. हम उसको संपत्ति के तौर पे जोड़ कर रखते हैं. We add this money. We accumulate that money as wealth. So here we have two aspects of money. One is transaction. Second is wealth. Whereas in M1 there was only transaction perspective. Here we have two perspectives. That is why this is broader. and that is how we have narrow and broad money. Rest is just post office. M2 and M4 is just because of post office. Now what is M4? M4 is simply M3 plus total deposit in post office. Okay, in M3 we have total deposit in banks. In M4 we have M3 plus total deposit with post office. M3 is the most important measure here and M4 is the least important measure here. Okay, so M1, M3 are relatively more important because the importance of post offices have gone down. This measure is not very relevant anymore. Now let us start looking at the questions here. Okay, let us just read the question one by one here. Just give me 1 second, please. Yes. So, first question is, consider the following liquid assets. And these are all previous year questions that I am discussing in the beginning. Okay, we consider all these assets and we have to arrange them in decreasing order of the liquidity. Okay. How do we define liquidity? Liquidity has two meanings. Okay. Liquidity means flexibility also. Okay, conversion, flexibility in conversion. Any asset which can be easily converted into cash whenever we want, quickly converted into cash, we consider it to be more liquid. An asset which is not easily converted into cash, we call it less liquid. Okay, that is how we define. If it takes time, if it is a difficult process, then it is less liquid. If it is very quick, it is very liquid. So gold is a very liquid asset because you can anytime sell gold. In every city there are jewelers. You can go to those jewelers and sell gold and get cash. But if you want to sell your old car, it will take days. You can't get cash in hours. Maybe you can in some cases, but in general it takes some time. Gold is much more liquid than an old car. Old jewelry is much more liquid than an old car. Property is perhaps one of the least liquid because it takes a lot of time to find a suitable buyer at a suitable price. Compared to this cash is cash, okay, basically the most liquid thing by default because it is already, you can always convert cash into anything. Now we are looking at the sequence in decreasing order of liquidity. So which of them is most liquid? That is currency. Obviously 4 should be the first one. So answer is already out of B or D. These are rejected. Then demand deposit with the banks. Demand deposit with the banks basically reflect savings deposit plus current account. Okay, so demand deposit are the most easily withdrawable. Okay, so we generally consider current account to be more liquid than the savings account because on saving deposits there is a limit on withdrawal according to the account category, whereas on current account there are no limits on cash withdrawals and frequency also is very, very high. Means per day how many transactions you can have. In savings account this is less. Since demand deposit have both, it is considered to be more liquid. Saving is same, but where we have the current component that has more liquidity. Okay, savings deposit relatively less. So 4, 1, then 3 and then 2. Time deposit have least liquidity. You cannot withdraw money through time deposits. You have to break those deposits. Then those deposits will no longer be there. Okay, you cannot just simply withdraw some money out of your time deposit. So 4, 1, 3, 2. D will be the answer here. Okay, I hope this is clear to you and the concept of liquidity is also clear. Now liquidity as a concept should also be clear, otherwise in macro sense. In macro, liquidity means the access of the funds. Okay, in any system we have demand for fund, we have supply of funds. The difference in this demand and supply, okay, that we define as liquidity. Next question 2. Consider the following statement. Inflation benefits the debtor. Inflation benefits the bond holders. Okay. So inflation means price rise. and when price rise, value of currency go down. Now, it benefits the debtor. Debtor is whom? The person who has taken the debt. Okay, creditor who has given the debt. So, if I have taken a loan of 1 lakh rupees, I took the loan when with 1 lakh rupees, let us say, you could buy even a car in India, let us say. Okay, 15 years ago when Nano was launched, you could buy a car in India for 1 lakh rupees. Now after 15 years, I am paying 2 lakh rupees. Okay, with interest, I have to pay 2 lakh rupees after 15 years, or maybe 2.5 lakh. Today, the value of those 2.5 lakh that I am paying is even less than what 1 lakh had a value at that time. Because of inflation, the value of money has gone down so much that this 2.5 lakh today is less valuable. So the amount I am repaying is actually worth less than what I borrowed. So I am at an advantage. Why this is happening? Because there is a lot of inflation in India. In countries where you do not have inflation, okay, over there debtors do not have benefit of taking loan for a long term. But in India, when you take a loan, that is why home loan makes sense in India. Because when you take the home loan, and by the time you pay it, the value of money go down a lot. For example, I buy a house which is worth 80 lakh rupees today, or maybe I bought it in 2010, let us say. In 2010, 80 lakh rupees was a lot. If I had to pay 80 lakh rupees immediately, it was a lot more. Let us say it was worth equal to 10 years worth of my income. Let us say I was earning 8 lakh rupees per year in 2010, and it was equal to 10 years income for me at that time. Today, let us say I didn't pay immediately for the house. I took the house on EMI, and every year I am paying small amount for next 20 years. Okay, the total liability that I am paying is more than 80 lakh, but still the amount I am paying today is worth very less compared to those. So since the value of money go down significantly because of inflation, the amount we pay back has less value than it had at the time we took the loan. That is why it benefits the debtors. Okay. Then inflation benefit the bond holders. Is it correct? Okay, let us look at it. Bond yield. I will have a class where I will discuss the bonds. Okay, so please wait for that. Very soon I will cover this. But for now, let us simply talk about the formula. Bond yield is inversely proportional to bond price. Simply. Bond yield is inversely proportional to the bond price. Or in fact, you do not even have to go in that much technicality. Now I can think of a better, easy explanation. If I am a bond holder, that means I have given loan to someone. Who is bond holder? Bond holder is someone who has given loan to someone. Okay. I purchase the bond. Because of purchasing, what is a bond? A bond simply has following feature, that in 2030 this bond will have 1 crore rupees value. Okay, let us say in 2020 I purchased this bond. I purchased this bond for 40 lakh rupees or 50 lakh rupees. Okay, in 10 years my amount is supposed to double. Now the amount I am going to get in 2030 is fixed. This amount is not going to increase. I am holder of the bond. I have given the loan. If I have given the loan, then inflation should negatively affect me. Okay, the 1 crore rupees I am going to get in 2030, that will have lesser value if that bond is going to mature in 2030. Okay, so bond holders, will not get benefit from inflation. Inflation benefits the debtor. So which of the following statement above is or are correct? In this case, the one is correct. So answer should be A. Inflation benefits the debtor. Okay, and I have explained it much more easily rather than going into the technicalities. So even if you use bond yield concept, then also it will work like that only. Okay. Next, question number 3. With reference to Bitcoin, sometimes seen in the news, which of the following statement is or are correct? Bitcoins are tracked by central bank of the countries. This is wrong. Bitcoins are not tracked by the central bank of the countries. Okay. Anyone with a Bitcoin address can send and receive Bitcoin from anyone else with a Bitcoin address. That is correct. Third, online payment can be sent without either side knowing the identity of the other. That is why Bitcoin is used for ransom. Okay, फिरौती में भी use होता है Bitcoin. That is why it is used for the ransom activities by the smugglers, criminals, terrorists. So answer is 2 and 3. Question number 4. Which of the following correctly describe the meaning of legal tender money? Just give me 1 second, please. Yes. Legal tender money. This is a question from 2018. Legal tender money is fiat money. Okay. Now, the money which is tendered in the court of law to defraud, no, incorrect. The money which a creditor is under compulsion to accept in settlement of his claim. That is actually correct. Okay, but you still have to check out the others if they explain it even better way. The bank money in the form of check, draft, bill of exchange, etc. No. Okay, somebody can refuse draft as a payment. Somebody may reduce bill of exchange as a payment, but you can't refuse the B as a, the legal tender in the payment. The metallic money in circulation of a currency. No, that is coins. That is only one part of the legal tender money. B is correct. Okay, that is the most complete and better out of these. Always read all the options, even if you can figure out that the initial options are correct. Question number 5. If you withdraw 1 lakh rupee cash from your demand deposit account at your bank, the immediate effect on the aggregate money supply economy will be, okay, if I withdraw rupees 1 lakh in cash, what will be the impact on the money supply? And it is from demand deposit. Okay, notice this. What will be the immediate impact? This is also important. All this information is important. Will it reduce by 1 lakh rupees? It looks correct actually. If I'm withdrawing money, it should reduce. But look at the formula. I told you the money supply is M3. This is the official money supply. This is currency with public. Okay, we wrote it M1 plus time deposit. But if I have to write it independently, again I have to define it. Currency with public plus total deposit in banks. In M1 we had demand deposit. In M3 we had demand deposit plus time deposit, which will make it total deposit. That is also how we can write this. Total deposit with bank. My handwriting with this pen is not so good actually compared to the traditional board with the marker, but anyways I hope it is legible. So either I have to write very slow and very carefully. Okay. Now what has happened here? I'm withdrawing 1 lakh from my bank account and it is now available to me as a currency. So 1 lakh reduced from here but increased here. It should not have impact on M3 actually. Okay. So that is how we should look at it. Third entry over here is other deposits with RBI. They are of course not affected. So it will neither reduce nor increase. Okay, it will leave it unchanged. It could be CO actually. C is also a possible option, but because immediate effect was given, C will not happen here. We have a concept of money multiplier. Okay, so C could have been a possibility. I'm not going into this particular question right now, but C could have been a possibility. But right now, in the current immediate impact, I withdraw from the bank at this stage itself. It will be unchanged because total deposit might be reduced, but currency with public has increased by the same amount. So I hope now this is clear. D is the answer. Question number 6. In the context of Indian economy, non-financial debt includes which of the following? This is a technical question, bit tough. A lot of students get stuck in this one. See, non-financial debt. What do we mean by that? Financial debt and non-financial debt. Financial debt is the debt of the financial system, financial sector of the economy. Non-financial debt is the debt of the non-financial institutions. Okay, if a debt is of a bank, insurance company, or any other NBFC or bank finance related company, it will become under financial debt. Every other debt is non-financial. That is how we define it. Okay, and it is a bit tough, I would say, because generally we do not talk about financial, non-financial debt. Housing loan owned by household. So of course, these are non-financial. Amount outstanding on credit card. This is also owed by us to the bank. This is not debt of the financial institution. Okay, this is an asset of financial institution. This is debt for common people. We take credit card. Okay, so ये पैसा हमें देना, ये हमारी liability. This is liability for us. So this is also non-debt. Treasury bill. This is a debt of government. So that is also non-financial debt. All of these in fact are non-financial debt. D, 1, 2 and 3. It was actually tough because we think about it as which of these are non-financial instrument, because that is the term we most commonly use. We do not use this term debt. Non-financial asset, gold, okay, and real estate. These are example of non-financial assets. So, and over here people could have thought of one, okay, if they think from physical asset, but that is not the case. It's a very different kind of a term, not commonly used. I hope, okay, these are clear. Good technical questions have come here. Next question. Now we are through the typical past year questions. Now we are moving ahead. Which among the following is or are included in the calculation of high power money, M0? We know the formula. What is the M0 formula? Currency in circulation. Okay, remember in M0 we have currency in circulation. In M1 or all other we have currency with public. We do not use currency in circulation there. So there is a difference. So currency in circulation, okay, plus bank deposit with RBI plus other deposit with RBI. Now, deposit held by commercial banks with RBI, this is correct. Deposit held by Government of India with RBI, this is also correct. This will come in the other deposits. Cash reserves of the commercial bank, that is also correct because that is also kept with the RBI. Note and coins held by people, that is also correct. That is currency in circulation. So answer should be D. 1, 2, 3, for everything is included here. Okay, so from formula itself you can very easily figure this out. Question number 8. In reference to the concept of monetary aggregates, narrow money and broad money, consider the following statement. M1, M2, M3, M4 are alternative measures of money supply published by RBI. That is correct. They are alternative measures. Okay, they are alternative to each other. You can look at any of them. They are not, they cannot be put together. You cannot add these together. Okay, so that would not be a reasonable thing to do. So that is why we use the term alternate. But it was really tough, okay? It is a tough question because as an alternate term, it's difficult to interpret sometimes. Second, M1 is the most liquid and easiest for transaction, where M4 is least. I've already discussed it. In the M1, your savings account deposit, your current account deposits come. You can withdraw that. When I go to market, I buy with currency in my pocket and through my debit card, okay, money in my bank account. So M1 include that only. It is transaction money which is easily available. In M4, we have FD in bank. We already have FD in post office. If you want to spend that money, it will take a lot of time. Okay, whereas M1 you can spend immediately. So M1 is most liquid and M4 is least liquid. That is also correct. So both 1 and 2 here. Next, 9. Consider the following pair types of money description. Okay. Now we have discussed the various types of money. Now let us look at their description. Fiat money, backed by physical commodity like gold. I told you this is not necessary. Okay. Fiat money need not be necessarily backed up by gold. Fiat money simply means which is issued by the government. Okay. So not necessary. Second, legal tender, mandatory to accept it as a mode of payment. Legal tender fiat money is the same thing by the way, and second is a better statement. So one is incorrect, second is correct. Fiduciary money, backed by the trust between payer and payer. Okay, acceptable because of trust. That is also correct. 2 and 3 will be the answer. C should come. Question number 10. With reference to the concept of monetary aggregate, narrow money and broad money, consider the following statement. M1, M2, M3 and M4 are the alternative measure of money supply published by RBI. Just give me 1 second. Okay, I made a mistake. Maybe I repeated a question. It's okay. It's okay. Okay, it was just a repetition here. Question number 11, I did notice it. 11th, basically it should have been 10th. Consider the following statement with respect to the money supply. Credit and loans are not taken into account, okay, while measuring money supply in the economy. Do we consider credit and the loan in a system? We have written the money supply, okay, money supply was M3. What does it show? The currency with the public plus the total deposits in the banks plus other deposit with RPM. Have we taken credit and loan into account here? No, we have not. So we take into account the deposits. One will not come. Second, okay, सोचना नहीं है इसके बारे में. You do not have to think about it. Simply look at the formula, you will find out. An increase in the supply of money can lower the interest rate and generate investment. An increase in the supply of money can lower the interest rate and generate investment. Okay, when money supply increase, the interest rate go down. This is correct. Okay, that is what we study in money supply and the monetary policy. And if interest rate is less, it is easier to take loan. Companies take more loan and they invest that. So this entire statement is correct. In this case, 2 only would be correct. So answer for 10th. It should have been 10th, okay? No. So this question is B, 2 only. Okay, and with this, we end this session on money. The next session I will have on the monetary policy. Thank you. I hope this session has helped you. And if you think this is worthwhile, please share it, like it, spread word about it, okay? That can be your contribution. Thank you.